Okay, I think I've started now. Okay, so where we are now is how you can start investing in the UK. So this is very important that you get it right. And I'll treat it as if I'm explaining to a 5-year-old so that everyone will get it. So there are two investment accounts that you can have. There is a general investment account and there is a stocks and shares ISA. Those two ways you can invest in the stock market through them. But there is a clear difference between the two. First, the general investment account. If you make a capital gain or dividends on that general investment account, I've explained what capital gains is to us. That is, if your stocks appreciate, the share price of the stock you buy appreciates. Let's say you buy a stock for £10, the stock goes to £15. Your gain is £5 on it. That stock is paying dividends. They pay you every quarter. So the difference between ISA and general investment account is that on the general investment account, your capital gain and your dividend will be taxed when you reach a certain threshold. Do we understand that?
It's taxed by the government, right?
Yes, it will be taxed. As a matter of fact, if you are a high income earner, it will be taxed at 20%. And if you are a basic income payer, it will be taxed at 10%. I believe the capital gain allowance has been reduced to like £1,500. So anything above that will be taxed. Same thing, the dividend allowance has been reduced to like £500. It used to be like 1,000 or so before. So they've reduced that last year. So anything above that will be taxed. Please ask your question.
So, sorry, let's say you said anything above the 1,500.
Yes.
Is it inclusive the 1,500 or let's say 2,000 capital gain now? Is it the 500 that will be taxed 20%
Yes.
or the
Yes.
£2,000 itself?
Yes. It's everything after allowance
Okay.
that will be taxed. Yeah.
Okay, thank you.
But if you invest the same amount inside your stocks and shares ISA, you won't pay any tax. Those are the two ways that you can invest. So now, I'll focus, I won't even bore us to talk about different type of ISA. Let's just focus on the stocks and shares ISA. But an ISA is simply an individual savings account. And we have 4 types of it. We have the lifetime ISA, stocks and shares ISA, we have cash ISA, we have innovative finance ISA. Now we need to know that this individual savings account, the maximum allowance that the government is offering us on individual savings account is £20,000. Now I will explain some little difference in this. As a person, you can decide to put all your £20,000 inside a cash ISA. And maybe that will be getting some interest. Those interests will not be taxed. You can decide to put everything inside the stocks and shares ISA and invest it to buy some stocks. Everything inside the ISA is not taxed. A lifetime ISA is the only one that is quite different from others because the maximum you can put inside a lifetime ISA is just £4,000. And the lifetime ISA is not for people that are above 40 years. And also bear in mind that if you are putting your money inside a lifetime ISA, you can take the money out because of 2 reasons. Either you want to use it to buy your first house or for your retirement. But the advantage of lifetime ISA is that any amount you put inside it, government will pay you 25% on top of any amount you put inside it. Do we get me?
Yes.
Okay.
Yes. Please, I have a question.
Yeah.
Based on the lifetime ISA, right?
Yeah.
So you said, can you pull the money at any time you want?
So tax year in the UK is from April the 5 to the next April. That's the tax year in the UK. And we are in a tax year like this that is going to end next April. So you can open a lifetime ISA today and you start putting any amount you have. Just that you can't put more than 4,000 in it. And they will pay you
Okay.
25% on whatever you put inside it. So if you put the 4,000, you get 1,000 on top.
Okay, fine. So that means the maximum amount I am permitted to put in my lifetime ISA is £4,000.
Yes.
So I can't go
So
beyond £4,000.
you can't go beyond 4,000. Now, bear in mind that you have £20,000 maximum for your ISA. So if you decide to open a lifetime ISA and you maximize it, you put £4,000 in it, that means you have £16,000 extra. And those 16,000, you can decide to put it inside either stocks and shares ISA or inside a cash ISA.
Sorry, I have a question.
Yeah.
So let's say I open a lifetime ISA and I've been able to save like up to £4,000. Does that mean that I can't put any money inside that account again? If not, it will be taxed.
No, the maximum the lifetime ISA will actually take, it can't take more than 4,000.
Oh.
So you can't even do a mistake to put more anyway, they won't take it.
Okay.
And anything inside lifetime ISA is not taxed.
You can't really cheat the government at this point. You can't. So because I know most people just go and push their lifetime, all their savings into lifetime and then wait for
No, you can't put more than £4,000 in it. And yeah.
Funny.
And the funny thing is that people should be aware of a lifetime ISA because there is maximum to what you can use it to buy. The maximum price of a ISA that you can use lifetime ISA to buy is £450,000. So if you are buying a house that is more than £450,000, then you can't use a lifetime ISA. And also, if you know that UK is not your final destination, that you are leaving to somewhere very soon, then you should not use a lifetime ISA. Because if you decide to withdraw your money and you are withdrawing not for your first home or for retirement, you are going to pay a penalty to withdraw it, which is 25%. But for people that want to stay in the UK and you want to buy a house that is not up to 450,000, it is a very good way to improve your savings. Okay?
Okay, I have another question. So
Please
now
ask.
you talked about cash ISA. So you said that the maximum someone can put in a cash ISA is 20 grand.
Yes.
So that means if, for instance, I was able to get more money in the future, maybe savings, that means I can't put more than 20,000.
That's the maximum you can put in an ISA. Yeah. You can't put more than 20,000. So what now happens is that if you know that you have more than 20,000 grand, 20,000 pounds extra, and the first thing you should try to do is maximize your ISA first. And if you still know that you still want to invest in the stock market, then that money will now be put inside the general investment account, which you know that you are going to pay tax on. Do we get it?
Yes.
Okay.
Okay.
So if we understand the basics like that.
Sorry. I want to
Yeah.
understand something. For instance, now I have little cash in my savings account. So every month the bank gives me some money. Do you understand? Small money based on 4% interest from my bank. Then does it mean that those interests that the bank is paying me, that the government is going to tax it, or does it mean that the government will tax my own money or the interest?
So if the interest you are earning pass the government, they gave us allowance already anyway. And the money the bank are giving you, except you are very rich, won't actually beat that allowance. So that is the reason why you might not see it being taxed. Do you get? So
Yes,
it's your
yes.
interest that is going to be taxed. It's not the money you have.
Okay, okay, thank you.
Yeah. So, oh, somebody is waiting. I didn't even see that. Okay. So that is clear on stocks and shares and general investment account like that. Now, one thing I want to be clear to us now, we should all see now that the best account to invest in the stock market is the stocks and shares ISA, right? Because
Yes.
you know that everything you make, and I mean, everyone is running away from tax in this country. So you know that everything you have, you gain inside that account is not taxed. Let's say you invest 20,000 in a stock, and in a year, you gain 20,000 on that stock, making 40,000. That money is not taxed. So that is the beauty of ISA.
Okay.
So that is the account that we need to open if we want to get started investing in the UK. Now, where do you get this account? That will be our next question. So this account can actually be gotten through what we call brokers. So take brokers like a middleman. You want to buy a stock of a company, but you yourself, you don't have enough money to actually go and buy the stock from that company by themselves. So most of these brokers, which are the middlemen, they buy huge amount of these shares of this company, and they will now be the one to sell it to you. So the next thing will be to open a brokerage account. But this is where you need to be careful, because you need to ensure that you go with a regulated brokers. In the UK, the organization that regulates company like that is called FCA, Financial Conduct Authority. So you must go with a regulated broker to start your investment. I'll give you list of examples of some of these brokers. We have Trading 212, we have Vanguard, we have Hargreaves Lansdowne, we have Invest Engine, we have Free Trade, we have AJ Bell, we have them like that. But those are the most popular ones that I just listed for you. These brokers, all of them are regulated, and they all offer stocks and shares ISA. But they all have minor difference depending on what you want. Let's take, for instance, some of the broker, they only offer something we call exchange traded fund, which is called ETF. Some of the broker, an example of this is Vanguard and Invest Engine. Those two companies only offer ETFs. Vanguard offer only their ETFs. Invest Engine offer ETF as well. Then group company like Trading 212, Free Trade, and Hargreaves Lansdowne together. This company offer exchange traded fund and individual stocks. So what this means is that, let me just explain what exchange traded fund is. So exchange traded fund is just like a basket of company. So we have a basket like this, and inside that basket, we have company like Amazon, Google, Tesla, Microsoft, Coca-Cola, and all in a basket. That is called exchange traded fund. An individual stock is when you buy singular entity. You buy just a stock of a company. Do we understand that concept?
Yes, sir.
So Vanguard and Invest Engine only offer exchange traded fund. Company like Trading 212 offer individual stocks. You can buy individual stocks and you can buy exchange traded fund as well on them. So they offer the two. Now, company like Trading 212 offer something we call fractional share, which means if Tesla stock today is selling for $200 a share and you don't have $200 in your account, you only have $100. Trading 212 will allow you to buy 0.5 share of Tesla. Company like Hargreaves Lansdown, they don't offer such. Same thing with trading with Vanguard, they don't offer such. Another thing you need to factor in when you are considering which broker to go for is the cost. The cost is different from all the brokers, but by and large, most of them are low cost. Vanguard is low cost. Invest Engine is low cost, but Invest Engine is actually low cost than Vanguard. Trading 212 is 0% commission. Free trade, you pay subscription fee for them every month. You pay something like they started with £3 a month, and now I think it's like £5 a month or £4 a month. So when you factor most of these things in, then you decide which one to go for. I personally use Trading 212 myself. So if anyone wants to open their account, maybe after this meeting, I can share you my link. They normally do some promo at one point where they give whoever share you their link some shares, and you also get some share when you open your account through that person's link. So if you are interested in that, I can share with you after. So that is that. But that is how you make decision on which one you want to go for. But all of them are regulated. As a matter of fact, I normally advise people that at the beginning of your investment, you shouldn't actually worry too much about which broker you go for. As long as we know that they are all regulated, what matters most at this point is getting started with your investing journey. Okay, so that is on broker aspect. Now that we have talked about broker, and it's so simple to open this brokerage account. You get either you use a link or you go to your Apple Store or Play Store, download their app, except Vanguard doesn't have an app. It's website. So you go to their website or you download their app, you verify your identity. You can use your driver's license or your BRP to verify your identity. Once identity is verified, you fund the account. And once you fund the account, then you can start investing. It's that simple, guys. Do we have some people that already have the account here?
Yeah.
Okay,
I have
great.
it.
Great. So it's that simple. Once you have done that, you verify your account, you fund your account. Now, what do you invest in? This is one of the reasons why some of us are here. What do we actually invest in? So I'll give you many instances. So first off, I want us to know that as a people like us that are investing in the stock market, we call us retail investors. Because as you are investing, we have people with billions. They call them hedge funds, or some individual with a lot of money that are investing as you as well. And they have a lot of resources, both human resources and technological resources. Oh, okay, somebody is raising their hand. Please ask your question. Abdul Qadri, yeah.
Oh, sorry, sir. That was a mistake. I was
Oh, okay.
just pointing that I have an account with Trading
Oh,
212.
okay, that's great.
Yeah.
Okay, so we have hedge funds, we have individuals that have both human resources and technological resources. They make researches every now and then about this same stock market that you are just in the UK want to start investing with your £100. So we are different. These people have a lot of money. You don't have money as them. As a retail investor, how do you make money inside the stock market? What do you invest in? So we might have heard about the popular investor called Warren Buffett. He's one of the richest men in the world and is known for his investing nuggets and investing wisdom. When they asked Warren Buffett what a retail investor should invest in, he said, just invest in the S&P 500. That was his answer. Do you know what the S&P 500 is? The S&P 500 is you technically investing in the 500 largest company in the US, which include companies like Apple, Amazon, Google, Microsoft, Nvidia, Meta, which is Facebook. Name it. Any big company in the world is inside the S&P 500 because it includes the 500 company in the US with the largest market capitalization. If a retail investor just invests in the S&P 500, they will do well. Because in the last 100 years, the S&P 500 has been known to generate about 7 to 9% annually on average. So if you don't want to disturb yourself at all about anything, you can just invest in the S&P 500, which is an ETF. Now, on say like trading 212, if you want to invest in S&P 500 in the UK, in the stock market, we call something ticker symbol. This is the symbol that something is represented with in the stock market. The S&P 500 is represented with something we call FUSA or FUAG, VUSA or VUAG. This is called Vanguard FTSE S&P 500. That is what it is called. But the only difference between the two, they both track the same index, which is the S&P 500. But the only difference is that the FUSA pays you your dividends into your account, and you can use your dividend for whatever you want. You can reinvest it back, or you can use it to, you can withdraw it and use it to buy anything. But the FUAG, which is the VUAG, reinvest your dividend for you. Do we get that concept?
Please, can you come again, please?
Yeah. I think when we start trading, all these things will begin to make sense because some of the terminologies, oh my God, sounding so far.
So VUSA and VUAG, those are the two ways the S&P 500 comes in. They are Vanguard S&P 500. So when you search S&P 500, it's going to display most of these things. As a matter of fact, on Trading 212, you have like 7 options. One being traded in the Europe and things like that. But just search for these two. It now depends on if you want to get your dividend paid into your account, then you go for VUSA. Or if you want the dividend to be reinvested automatically for you, you get VUAG. Do we get that now?
Yes. So I have a question.
Yes.
So for the VUH, yeah, the one that will reinvest for you.
Yes.
If you want to withdraw it later, can you be able to withdraw it?
You can withdraw your money anytime. You can withdraw your money. It's just like them buying when it's time for you to get dividend. They will just use the dividend to buy that stock for that ETF for you again. That's just what it means. They use it to buy more of it for you. So that is what that means. Now, if you are a person that believe that I want to, even though the S&P 500 is diversified and most of the companies are global company, okay, they are still US company. I don't want my investment to just be in the US. I want my investment to be around the world. Then you can invest in a global ETF. The global ETF is called VWRL. That is Vanguard Global All Cap. So this one, that's VWRL, has like thousands of companies in it, and is diversified across the world. Even though most of it are still in the US, I think about 57% or so are in the US, and they have in Japan, Europe, UK, and across, that one is across the world. So if you don't want your investment to be localized to only the US and you want it to be around the world, then you can go for VWRL. Do we get that? Do we get that?
Yes, I do.
Okay, great.
VWRL, right?
So if you say, because I'm based in the UK, I actually want to invest in the large companies in the UK as well, then you can go for the one that is called FTSE 100, FTSE 100. That one contains 100 largest company in the UK that we have. Company like BP Oil, Shell, AstraZeneca, Tesco, company like that. But that is just localized in the UK.
Again. Please come again.
On which part?
You talk about VWRL and
Yeah.
100. I just need the abbreviations of this. I got the one for VWRL.
FTSE.
Okay.
100.
All right.
So once you just search that, that contains 100 largest company here in the UK. So that is if you want to invest in the UK as well, because you are based in the UK. But you need to know that historically, the US market has been doing more better than the UK market. Okay, that's on that. Those should be enough in your portfolio as a beginner. You shouldn't be worried so much to buy the hype stocks. These ETFs should be enough for you. Now, if you are looking for dopamines, because most of these ETF, they are less risky than if you invest in individual stocks. You can see an individual stocks just go down 20% because something happened to that company. But you know that if you invest in an ETF, as one company is going down, other companies are going up. That's the beauty of investing in ETF. You won't see that kind of volatility, that massive drop like that. You won't really see it in your portfolio. Do we get what I just explained? Do we get it?
Yes, I do.
Okay. So if you are a young person looking for volatility and some dopamine that comes with that, like me, you can decide to invest in some individual stocks. If there are certain companies that you really have interest in, and you believe that in the future, that company is going to do well, why not? Invest in it, but make sure that while you are doing that, you make adequate research and invest wisely. The higher the risk, the higher the reward, they say. But there's one quote from Morgan Housel that I like. He said he would prefer to make an average return for a very long time than making just a massive return at one instant. Do we get that quote? Hello?
It is safe to say is a low risk taker.
Exactly. So if you are very high risk taker, why not invest in Tesla? But just know that Tesla stock can drop today from 220 to 100. And at the same time, it can go from 220 to 400. Do we get it? So if you want to save yourself from those stress, just stick with this ETF. You are not missing out on anything because those stocks, you also invest in it, just that you invested small amounts in them because they are in an ETF. Please ask your question.
So based on the things you've said tonight, the ETFs you recommend or you think we should put money in are BWRL, BUAG, FTSE 100. Am I correct?
Yes, those are the stocks, depending on what you want.
Okay.
You may not have the three in your portfolio. You can have only one of them. VWRL is global ETF. It can be the sole investment in your portfolio. There are thousands of companies included in it. Do you get it?
Yes, I do.
Yes, yeah, I do. Great. So those are the ETF that I think they are okay. You don't necessarily, because if you have VWRL, personally, this is my opinion, but it still depends on what you want. You can make other research. I don't think I will have VUSA, VWRL in my portfolio because I think they kind of overlap. Because the only thing that might warrant me to have the two is just because I don't want to invest only in the US. But rather than that, I will just put it in VWRL because most of the stocks in the S&P 500 are already in the VWRL. The US market takes about 57% of VWRL. Do we get what I just said?
Yes.
Yes.
Okay.
Absolutely.
So if we understand it like that, then we can move forward. So you can decide to invest in individual stocks, but like I said, make adequate research before you jump into that. Don't just say because you see someone posting about any stock on Twitter or on anywhere, or anyone just tell you to invest in something and you just put your money in it. Please don't do that. Please ask your question.
Thank you so much for this last comment of yours. It is that same Twitter I saw this SPY5. It says S&P 500.
Yes.
The amount is like 580 something pounds. Do you advise we invest in that too?
It's the same thing with FUSA. They are tracking the same index, which is the S&P 500. The only difference between the two is the amount of money. While one is an ETF, I think the SPY is an index fund. It's the same thing. And this FUSA is cheaper than the SPY. So if you invest in FUSA and another person invests in SPY, you are investing in the same thing. They are tracking the same thing.
Thank you.
So when you put them side by side, you will see that they will be moving in the same way with the same percentage. Just that the difference is the amount you buy them is different. Do you get?
Yeah.
Okay. Hope?
Yeah. What will you say about this Wealthiful?
What's that?
It's like an investment app as well.
Oh, Wealthify.
Yeah.
Well, I know that they are also a brokerage firm, but will I recommend them? I've never used them. The only thing I can advise is that check if they are regulated by the FCA. If they are regulated by the FCA, then fine, you can invest with them. But I certainly know that some of those apps, they tend to be more costlier than the mainstream app, if you get what I mean.
Yeah. And my second question is, can you switch?
So one of the good things now about ISA, as of 2021, 2022, you can't, it's part of the regulation that you can't open two ISA at the same time. But one of the change that come with this tax year that we are in now is that you can actually invest in two ISA at the same time.
Okay.
So, and you can also transfer your ISA from one broker to another.
All right.
But I need to mention this. In terms of transfer, some of the broker will not allow you to transfer your assets Instead, they will want you to liquefy your asset. They want you to sell the asset to cash. And it is that cash that you now transfer to the other broker. Do you get this?
Yeah.
Okay, great.
Yeah. Thank you very much.
Yeah. Something like that happened to me in 2022. I have my investment first with free trade because I couldn't open trading 212 at that time. Now, when I want to move to trading 212, I wanted to transfer my ISA. They said I can't move my asset. So that was really bad because I had to sell some of the investment that I did not want to sell in order to allow this transfer. So that's why it's always so good to have make a good decision from the start. You get?
Yeah. Thank you.
So does it mean, right, that it's better to open stock ISA straight instead of like trying to transfer?
I don't get what you mean. Please rephrase your
So I
question.
mean, right, like opening an ISA account. That means it's better if you want to open an ISA, just open a share ISA.
Yeah, the best thing is to open a stocks and shares ISA with a broker that you know that you want to be with for a long time. That's the best thing. But if condition warrant you to transfer, maybe because their fee is getting too much, then so be it. You just transfer it, or you continue with a new broker and just leave that ISA without investing in it, without investing more in it. Do you get? You get me?
Yeah, but sorry, just
Yeah.
what you just said now. But if you don't invest more in it, will you lose money or will your money just stay there and just grow gradually?
Your money is invested.
Yeah.
As long as the asset you invest in is becoming more valuable, then
Yeah.
your money will also be growing.
All
And
right.
if the asset you invest in is not getting more valuable, you'll be losing money as well.
Yeah. Okay.
Yeah. Okay, Moses?
Thank you very much for that.
Yeah, you made mention of fee just not quite long.
Yeah.
Please, can you just throw more light on that, please? Thank you.
So some of these brokerage firm, they charge you some commissions, which is not much. Anyway, when I was with free trade, we were paying £3 a month as fee at that time, which I'm comfortable with because that's just like some £36 a year, right? So I'm comfortable with that at that time. Company like Vanguard also have their fee. I can't give you a figure now because I don't want to give you a wrong figure. But if you type it on Google, you will just see that figure. But it's a very minute amount of money. It's not something to be worried about. But even as minute as that money is, if you still pay it for a long time, it's going to compound, you get. So if I have a broker that is not charging anything, then I would rather stay with them. Do you get my explanation?
Yeah.
Okay. So that is
So it means trading 212 has the lowest fee, right?
they are 0% commission.
Oh, no wonder everyone goes for it.
So they are 0% commission, and I mean
Then
it's beginners
most people
friendly.
rather. Let me not say everyone.
Yeah, it's beginners friendly. So
Very fun.
I use it personally. So and I'm enjoying it so far. I've been with them 2 years now.
Wow, it's quite a long time.
So that is regarding what to invest in. I'll mention some book recommendation. Some of the books that helped me on this journey are general books like The Richest Man in Babylon. That's a very simple book that you can read in 2 days that will help you generally in terms of your savings, your general personal finance, and investing. This book that I just want to mention now is a very good book that is going to help you not just in investing but in your life generally. Is The Psychology of Money. Read that book. It is very important. It will help you in this journey. If you are lazy to read, you can listen to podcasts. If you search on that, you search Diary of CEO on YouTube. Thank God we are in a country that we have access to internet. So search Diary of CEO on YouTube and look for the interview Stephen Bartlett had with Morgan Housel, who is the author of Psychology of Money. Because I just now have that habit. When I read a book, I want to listen to that person that writes it. And the podcast have given us that opportunity now. Is so good when you listen to the author speak. So you can listen to that. It literally gives you the synopsis of the book and is very beneficial. I still listen to that podcast again and again, and it's very good. So read that. There is one book as well that is good. I Will Teach You to Be Rich. That is by Ramit Sethi. That is a very good book as well. If your aim is to retire early and you want to build wealth, you can read Simple Path to Wealth. I think J.L. Collins wrote that. So that is a very good book as well. You can read those. You have more knowledge about this thing. You really know, because the more you know what you are doing, the more confidence you have. When I first started, I started with 50 pounds, 100 pounds here and there, 20 pounds. As I get more in-depth knowledge with it, I increase my investment gradually, 1,000 and things like that. So that is how this whole thing works. So read those books. And the good thing is, as you are looking on YouTube, searching for information about stock market, you'll be getting more recommendation on what to listen to and how to go about them. There are many common investing mistakes that you can make as a beginner. One of it is trying to time the market. Nobody can actually time the market because you are just a beginner. Even those people that have good technology and many people doing research for them, they can't time the market. You can say a stock is going to go up tomorrow and that stock will be down. That is why it is very important to be dollar cost averaging as a beginner. What that means is that you stay invested at all time by setting a certain amount to be invested either on weekly basis or on monthly basis or daily basis. That is called dollar cost averaging. You don't mind whether the market is up or the market is down. All you have to do is just buy that certain amount every time. It may look counterintuitive, but on the long run, it works. Because on the long run, you have a good average. When the market is up, you are buying. When the market is down, you are buying. They made a lot of researches that there is someone that's always buying only when the market is down. And there is someone that doesn't mind buying all the time. They tend to see that on the long run, that person that is buying all the time did well than that person waiting to buy on the lowest side, because that person buying on the lowest side is actually not buying when it's really on the lowest. So no one can time the market. So don't try to time the market. Just stick with the ETF you are buying as a beginner and keep buying in it. Or if you believe in a company, just stay invested in that company and you'll be fine. Okay. Another thing, internet. Don't listen to what you see on Twitter. Even if you see someone post something on Twitter that, oh, invest in this and that, do your own due diligence and research before you put your money into that thing, and you'll be fine. You won't be scammed and all. What other mistake do people make? Always invest in anything that you understand. Don't invest in what you don't understand. What do I mean? You see a company, you don't even know what that company do, and you just put your money in them. How do you know that company will be more valuable in the future? You don't know. So please don't do that. And I think that's about it. If you have questions, please ask. Okay, go on.
Someone talking.
Yeah, I think Kim. Yeah.
Okay, you go first, Cynthia. You go first.
Okay,
Okay.
Cynthia.
Sorry. I just wanted to ask. I've been seeing this Bitcoin, Dogecoin, and all those stem coins. What exactly is it about?
So, first thing you need to know is that crypto market is highly volatile and is more volatile than the stock market. What that means is that crypto market is a very young industry and there is high volatility there. Whatever asset you invest in crypto market today can go to zero. If you have the mind to invest in there, what I would recommend is invest in the biggest players, which are like Bitcoin and Ethereum. That is what I do personally. But even at that, I believe in that industry. But you still must know that it can go to zero. So if you can bear that, then why not invest in it? High risk, high reward. And yeah, just know that you can lose everything in it.
Okay.
Yeah.
Thank you.
You're welcome. Okay. Next question.
Okay, my question is this. Thank you so much for detailed lecture about investing and the like. So you talked about ISA, you talked about the savings ISA, stocks and share ISA, the lifetime ISA. So based on the update you talked about regarding this financial year, I can have a maximum of 4K saved in my LISA. That's basically for retirement for home purchase. And I'll invest in my stock and shares ISA.
Yes.
Put everything there. So in summary, I can spread all my 20,000 pounds into my ISA, all three within the financial year.
Yes.
Okay.
So it just have to be like 10,000 in stock and shares ISA, 5 in or 6,000 in cash, 4 in LISA. So it can be spread.
Makes sense. Thank you.
Okay. Any other question? Okay. If we don't have any question, I hope we all get one or two things from this lecture. And I think that's about it. So for those that wants to open their Trading 212 account, I am going to put my link inside the group on the WhatsApp group there. You can use my link, and while you get a free share, I get a free share as well. I think the share can be what, £100 or something. Yeah. So thank you guys for coming, and yeah, really appreciate you all.
Sorry, all those abbreviations and all those individual shares, can it please be put on the group chat?
Sure, I can do that.
Thank you.
And I'll put the recording there as well anyway.
Oh, thank you.
Yeah. All right. Thank you guys for coming.
Yeah. Thank you very much.
Yeah.
Thanks for having us. I appreciate it.
Yeah, you're welcome.
I said, can we always ask question in case in the course of registering or doing the stuff, can we always ask question in the group?
That's my plan, to make the group kind of a community, but I'm still deciding how I'm going to go about that. But in the meantime, yes, you can. When I finish how I want to go about it, I will post in that group and see how it goes. Yeah.
Okay, thank you very much.
Yeah, you're welcome.
Yeah. Okay, good night.
Yeah, good night. Yeah. Oh, there are still two people here, right? Abdul Qadir, can you listen? Can you hear me?
Yes, I can hear you.
So are you familiar with how Teams work?
Yes, to an extent, I think. Yeah.
If I just press leave, is it going to save automatically the recording?
Oh,
I'm
I'm not okay. I'm not really sure about that.
I don't want all this recording to go.
To go to waste. I understand.
Okay, anyway, let's see. If it goes to waste, then so be it. I don't
Do you
think I
want
can
to
help.
try stopping the recording first and see if it saves or something like that?
I tried to click on it, it's just not doing anything. The only option I see here is the leave. Okay, let me see end meeting first. Maybe if I end the meeting, it's going to save automatically. I'm not sure. I hope it does. Okay, I see stop recording. Okay, I stopped. So stop recording, stop.